Hey everyone, my name's Andy. I'm Finding Value Finance. I'll be your host today. We've got Kasper with us, or Uselink. He is from Twitter. We've done multiple interviews together on the channel, so I wanted to get
Yeah.
him back on. Wanted to get his opinion on a lot of things. So thanks for coming back on, Kasper. Appreciate it.
Yes. My pleasure. It's always fun to be enjoying your company, talking stocks and technical analysis. Both you and I have a passion for that, so it's great company. It's always a pleasure to be here. So fantastic.
So let's dive right in then. So wanted to get you on. I know there's a lot of stuff happening in precious metals, stuff like that. I know a lot of the charts look, I'm guessing, pretty dang good. What are your opinions on the gold and silver market right now?
I think if a lot of people is talking about yes, gold and silver, they are looking overall extremely well. But I think also that a lot of people is not talking enough about the gold to silver ratio. From a technical point of view, I think we are about to break. We have broken down, retested, and now I think we're going to come down even harder. And as you know, that's very good for gold and silver, obviously, because when you have these big crashes in that ratio, almost always is because gold and silver is going up, silver is going up even more. And I think also what people don't know is actually if you take the invert, which is silver to gold ratio, that actually has a high correlation with the ETFs for the miners, the SILJ and the GDX. So to me right now, it's the perfect storm for the metals. I do also think at some point, within the next year or so, we will have a huge snapback, but I think that will come for everything. The big stock and all that will come down hard. We'll take, as always, everything with it. But more often than not, the gold and then silver is usually the quickest one to recover. So should
You're,
I
you're
share
talking
the
about
chart just to, yeah?
you're talking about a slowdown in the market in the uninversion of the yield curve. Is that what you're talking about in terms
Yeah, I
of the
think it's
slowdown in the market?
yeah, the timing of it is
Right.
always very difficult, but at some point in time we will get that inversion, and that's usually the precursor to the market that hey, we are about to hit hard. You can go back, every 2008, the 2000, and I think it's 1987 or so, 89, 90, I can't remember, but in that period
87,
also, yeah, you had
87, 90, 91. Yep.
yeah, yeah, you also had a
Mhm.
huge inversion, and what came after that was a huge crash, and then obviously the recovery. But I think um, yeah, at some point in time it will come again. The timing is always difficult, but the chart is suggesting on inversion at some point, and that's when things is not looking so great for basically probably everything, right? So
Yep.
so yeah. Can you share the screen now, Andy?
Yep. You've got the
Yeah,
screen up.
cool.
Looks like a gold to silver ratio is what we're looking at.
Exactly. And yeah, I think most of your viewers know what the ratio is all about. Basically, we want this to go down because then silver is outperforming gold, and usually, or almost always, that's because they are both going up. Silver going up more. Um, but I wanna just 1 second there. There it is. Good. So what happened here? I think it was back in May. In the mid of May here, we had this huge move down here, which basically was a breakdown of a 15-year long trend line going back to 2011. And then you have 2021 here. And then we were breaking down right here again. And then for the past, I think 2 months or so, we had the retest, rising wedge, testing, rolling over. So from a technical point of view, as you know, you have to have a bearish bias on the ratio, therefore bullish gold and silver. Um, and what we're seeing here, as mentioned here, this inverted, if you were to invert this and you were to overlay the minors, the correlation you could see here is very high. And yeah, so a rollover here spells um, a lot of upside for the miners very closely. And I think we can take a look at some of the charts also, the ETFs. But
Can I make a comment real here too?
yeah, sure.
What the gold and silver chart when you back out, you had that big uptrend pattern that you had on like a 15-year or whatever it is. that period was the real estate recovery phase from about 2011 all the way
Hmm.
till very recently. We're just entering an expansion phase, and it takes a little bit of time for that credit to get in the system and all that. And then eventually you get a tech crash. The tech crash occurred in 2008 and 9, and then they reinflated it all. And then that was the period as gold outperformed silver. It was when tech stocks and S&P went up the entire time. Now we're shifting that. So I think it's a huge, like it's a very big deal that we're at the end of that phase. So we're going from one phase to a new phase, which I think the commodity phase is coming. I'm very
Yeah, yeah,
excited
yeah,
about that.
yeah. I completely
Sorry
agree.
to cut you
And
off. I just
yeah,
noticed that when
it's
I was.
perfect. Yeah, perfect, perfect. And also, there's a lot of things you can extract from this ratio. And I think if we, at one point in time, I think we should have like an hour just looking at the ratio because there's so many nuances to the Fibonacci levels and all that good stuff. I think I've done it before, but I actually want to show it again here, just very briefly. You know what I'm talking about, I think. And that is the alignment of the Fibonacci extension, meaning you can actually measure the potential downside given the past move. So if we take the top from 2020 to the low there in 2021, back to the highs, just very briefly here again, we could talk about this for like half an hour just to look at this ratio. But you can see here the 1.6 is perfectly aligned with the 2011 high. And again, you have the next fib perfect alignment with back in the 80s. And then you have the last one here, the 3.618, which is H1 here. And that's basically also the physical extraction of silver in relation to gold. You're getting roughly 7-8 ounces of silver per gold at the moment. So to me, the alignment again is perfect. And yeah, when you have this perfect alignment, usually I think you are on the right track of things when you have this when the stars are aligned right now, which I think they are for gold and silver. Um, so yeah,
Here's a question. I know you've
yeah.
got that fib extension going all the way down.
Mhm.
What is the probability of actually going to those levels, do you think? I know it's impossible to be that precise, but just by looking at all the stuff that you've looked at in history, like what do you think the chances of getting to 1.618 is, or getting to maybe even as far back as like a 1 to 16 ratio? Like, what are the chances you think of doing that
I
for
think they
silver?
are. I think they are fairly high, and it's not because I'm biased or anything, but I think the pendulum has swung so much in one direction. With tech and global financialization and all that good stuff. And yeah, the pendulum is usually going to swing the other way at some point in time. And depending on how long we're going to swing back, um, I think we can easily sound it's a big word, yeah. But I think at the end of it all, in like 10 years time, whatever, I think we will see these sub 20 for a very short period of time, sub 20 in the gold to silver ratio, meaning you can actually swap 20 ounces of silver into one ounce of gold, which I would highly recommend you doing when we get to those levels. I would start to hand your beloved silver and then into gold. It will be a great swap, in my opinion. And don't try to
I
catch
will
the
have a
bottom,
lot of
the
gold at that
exact
point.
tick, but excuse me?
I said I will have a lot of
Yeah,
gold at that
yeah,
point if it gets
yeah.
to 1 to 20, and I have the balls to hang on that long because I'm sure there'll be some volatility as we go.
Oh yes, oh yes, oh yes. That will be, uh, just as on any chart, nothing goes in a straight line. There will be huge supports at some point in time where you will have like a half year when gold and silver drops, right, and the ratio increases. And yeah, just like every other chart, you will not have a straight line down. So
Is there any other trends or anything going on alongside gold and silver that maybe furthers your confidence in this ratio dropping to that level? What I mean
yeah,
is, like, is it interest rates that are kind of giving you that conviction that it could go down there? Is it, what is it? Is it just the financial assets are so out of whack that that money's gonna rotate over? Is it interest rates that are kind of doing that, or you don't know? Like, what's your opinions there?
I think we can have a look at interest rates because I think they are at a little funky moment here in time. Looking at it a bit more short term, not like a long decade like we just did there on gold and silver, the ratio. But here we are going back roughly 9 months or so, and this the 10-year, by the way. So the 10-year, and you can see here we actually very close to, in my opinion, breaking down from a topping pattern here, meaning it looks like we're going to see lower rates in the foreseeable future here, at least for the remaining of 2024. And a potential target could be, you know how you usually measure these things. We could see it go down. We could see it go down to 3 roughly, based on that pattern alone, and that will obviously help gold and silver also confirm, if you can say, that gold and silver is definitely due for a move higher when looking at interest rates alone. So that's one way to look at it. Do we have anything to add, or should?
But yeah, I'm just trying to think.
Yeah.
I mean, if we're going to be going up in silver and the ratio going down for like say 10 years or something like that, that's going to occur under a declining interest rate environment, probably an increasing one too, because
Yeah,
they'll
yeah,
probably
yep.
drop it and then we'll probably go back up.
Yep.
So rates will be going down and up all over the place, I think. Or do you think we're just going to do a blast off in the next next 18 months or something like that?
I don't know. It's that's difficult to say, but I will just go back to your in the statement before. Again, I also want to say that for the past, what is it, 30, 40, 50 years, 40 years, we have had lower highs and lower lows on the interest rates, basically all the way down to 0. That game is over. You will have higher highs and higher lows. So when I say we're going back to roughly 3, we could go to 2.7 to 3.1 here. But again, it is like a counter trend move overall for the next foreseeable future. We will be having higher and higher rates with pullbacks, as you always have. But basically the inverse of what we just have seen here for the past 40 years. And if you go back to the 1970s to the 1980s, for a 10-year period, you had higher and higher interest rates, and gold did, I think, at 20x at that point in time. So under certain circumstances, gold will outperform, rates going up. And I think we are there again, big time. So
Yep, I agree.
So yeah. But also
You got what do you have there?
This is the DXY, so the dollar index. And if we invert this one here, it actually look to some degree, not lately here, this looks a lot like the gold chart if you were to overlay it. We can quickly do it here, just to show you that gold, as you know, is tracking. Just gonna set it up here. Gold is tracking the loss in purchasing power, and I think this chart, it will. Let's do like this. There it is. Good. So the golden one here, or the orange, is gold, and then you have the inverted dollar divided by inflation, meaning loss of purchasing power. And you can clearly see here they track each other fairly well, right? Obviously with overshooting and undershooting, I get it. But if you zoom in here on the dollar alone, you can see here that the dollar is about to lose the battle against inflation. Remember, this is inverted, so you have to see it actually dropping down. Therefore, gold will start to move, and it has already. So I think gold is predicting this final breakdown in the dollar in adjusted for inflation. So that is good if you have overall commodities, metals, in specifically metals. But if you hold dollars in your bank, I think you can easily, over like a 7-year period, you can take the value of that can get cut in half. You will still have like 100 grand, but you can only buy 50,000 worth of what you previously could. So yeah, and gold is sniffing that out, in my opinion. So
yeah, definitely. What other things do you have with gold and silver, or the ETFs or mining companies that you'd like to share?
exactly. I was just going to show you. This is the monthly of the GDX. So again, going back, we only have roughly 20 years worth of data here, 18 to be precise. But as you can see here clearly, we are about to finally, on the fourth touch here, in my opinion, break out of the gold miners, of the downtrend there. And again, when silver miners, platinum miners, uranium miners for that matter, and gold miners, when they move, they move. And I think we're about to enter. When we break here, you will see gold miners do really, really well for the next, I don't know the timeline here, but again, it can easily move for like 6 months, and then we are already all the way up here at roughly 55 easily. So that
Like a
is,
double.
yeah, roughly a double, a bit
Less
below
than-
there, but still, it's
Yeah.
it can, yeah, 50%. It can
50%.
easily do and more. It's very difficult to predict the timing of the mining sector because you don't have these slow and steady. You hit the target, you pull back, yada yada. It's a small sector, so again, it can move fairly quickly. And I think we are about to finally break here for the gold miners. Again, it
Do you,
comes back to the yeah. Go ahead.
yeah, do you think that the gold miners or the mining companies in general at this exact moment are the best opportunities in the market, or do you think there's other opportunities out there that are better than what we're looking at here?
No, I think definitely at least no, I'm not going to that. Yes, I think gold and silver miners is definitely the better play. At least very high up there in what to look at. And I think we talked last time. You asked the same question, and that was just before they actually took off. I think like it has just taken off. Or it did like 2 weeks later. I can't remember. Um, but I think there are a lot more to it still, and we are not over with regarding to going up in the gold and silver space. But again, as you know, you can easily have like 1 month where it increases by let's say 80%, and then you are getting cut in half straight. It is the pullbacks in the mining sector is relentless, and you have to be able to stomach those pullbacks. Otherwise, you will get shaken off. It's very very difficult to be investing into the mining sector. You know that a lot of people they know that for sure. It's very very difficult.
All right, so
Yeah, but
GDX, here's the comparison. Sorry to cut you off. GDX, GDXJ, SILJ. What do you like the best and why?
actually, when you look at it just now here, I think the GDXJ has already broken out, and the GDX is about to. But again, silver miners they are usually lagging, but when they move, they outperform the gold sector, you can say. So right now, gold miners, but I think within any day, any week, I think the silver miners will start to catch up if they haven't done it already. They haven't broken their big structures, but again, they have broken some internal stuff here, and they have done really well for the past month or so. But I would just, if I were to do this, I would again, if you are again somewhat new to investing into the mining sector, I would put most of the stuff in the ETFs because it's very difficult to pick like 10 stocks and manage that. And so maybe put like 10% into the ETFs. Maybe split it into a gold ETF. It could be the SILJ and then 50 the other into the GDX. And then you have 20% left just making up numbers here, where you can maybe, investigate, look which stock do you think is best, and then maybe pick 4 or 3 or whatever. But just keep it simple. If you don't have the time or the knowledge or the experience, because I think personally the commodities, especially mining, is one of the most difficult sectors to invest into. It's really really difficult. So
But I always keep this in the forefront of my mind. Um, we've got that huge cup and handle pattern on silver. We've got favorable gold to silver ratio breakdown. I mean, if you're going to take some money and if I was to swing for the fence, I would do it now, right? I mean, this is the perfect time to do it, would you say, or not?
yeah, I agree. The perfect time is there's no perfect time, but it's a very good time right now, definitely for investing into the mining sector. I still, yes, we have run, in the past month, we have run quite a bit. But again, if you are in for it for the longer term, like a year, 2 year, whatever you want to put it, I still think there's a long way to go, especially as you mentioned with the silver chart, which looks, from a decade point of view, absolutely incredible. And we have a long way to go. I have an absolute bear target for silver, which is $100. So if we get that, that's a big move. But I would be kind of disappointing still, because there's so much more to come. But yeah, silver is just
a bear target.
Yeah, like the lowest. I'm very bullish.
Bare minimum
The
target.
bare minimum, yeah, will be like $100, and that's basically the cup and handle measured in dollar terms. You add it on top there, the 50 on top, you have 100 roughly.
Sure.
So, but on a log scale, you get a different number. You're well into the 500 and 600. So yeah, and it sounds insane now, but again, I'm just saying what the chart is telling me, and that's all I can try to tell you. So
yeah, I get like 300 and something is my projected move on a lot of stuff, like 350-ish
yeah,
is what I get.
yeah,
And I could easily see it going over that too, depending on how you do it and what you use.
yeah,
So, we're looking at this. We've had a run up past couple months in silver. A lot of the silver mining companies have gone up over 100% off their bottoms. Are they still good buys though? I mean, would you jump into something like that, or would you wait? Kind of how would one approach this right now as we talk about it? Because I know I was really bullish. That was whatever it was, 3-4 weeks ago when we last
yeah.
spoke, or whatever it was. I was bullish because they were way down there. Now we've run a bunch. What do you do now? Do you chase those, or do you look in the sector and look for stuff that's still down? Like, what would you do?
I think there's actually a lot of stocks that ran quite far and then pulled back heavily. So they have come down a lot, but still within the overall uptrend. So no, there's definitely still stocks to be looking at, and still some of them hasn't broken out just yet. There's still stocks that are still within their overall pattern, just waiting to break out. But the big breakouts, they take time. They can tease you a bit, breaking out, coming back down a bit. It's very difficult at that moment in time to be precise. But yeah, we are in an overall, in my opinion, stage 2 uptrend on the weekly. So whenever you see pullbacks into support, again, these are times where you can add a tiny bit into it. Or if you see, bullish setups during that, like if you have a bullish consolidation, you're breaking out, you can add into that. So there's a lot of ways to do it, and no, I think there's still a lot of value to come. You just have to know what to look for. And one thing, if you have a stock that has risen, just nonstop for like 2 weeks, don't buy that. It could go on even further, but again, don't do that, because that's usually when you might buy it, then it goes up 30%, and then you have the 60% drawdown, and then you're like, holy, what is going on here? Then you sell, it's a whole, you do it inversely what you're supposed to do. So buy the pullbacks that will come. I think it was Defiant Silver. It ran 400% from the bottom, and then it got cut in half in like 2 weeks. So it's very difficult, very painful. But again, you have to embrace the volatility in both ways, I guess.
Have you looked at a SILJ to silver chart? I'm just
Yeah.
curious. Do you have
Yes.
that
Actually,
ratio? Because I thought it was kind of interesting when I was looking at it. The
yeah,
SILJ to silver.
exactly here. And this
Yep.
it's a quick draw, so it's not perfect lines and all that, but I think it gives an overall idea of what's about to come here. So basically, it's cheap. It's dirt cheap. I agree. And for the first time ever, I think you actually have a bottoming pattern that makes sense. If we zoom in here on the weekly, you have this neckline here, and then you basically have that bottoming pattern right there, like a double-headed inverted head and shoulders. You can say you have the two heads and then the two shoulders, and a beautiful weekly candle here. And all of this you're doing basically at the support line here. Yes, you're dipping below, I know, but still it's holding up very well. So again, if we get above roughly 0.43, then I think the bottom is in place. And that's when you have silver miners outperforming silver. and that's the base. That's basically not 100%, but that's one of the biggest definition of a mining, bull market, when you have the miners outperforming the metal that they pull up from the ground. So yeah, miners are dirt cheap in relation to silver. I
And
completely
that
agree.
outperformance, I mean, if we start to outperform, where do you think that could peak out at? I mean, is
Yeah,
that
I wish I had more data, because this only goes back to, after the peak. Yeah, so it's a bit difficult to say there, but again, um, you have. I want to show you some of the big resistances that comes along here. You have the upper golden, which will be resistance, and if we run really fast, I don't think we'll blast through there straight away. Usually, you get the check back, and then you're running again, and then you have some horizontal lines there at roughly 0.7, which will also act as big resistance. But the overall takeaway is that I think we're about to break here, and then you're breaking like an 8-year structure, and that's usually it leads to at least, we are breaking above the triangle high up here at some point in time. Um, and
so
one
that
note,
means
by the
that
way, yeah,
that means that Silj would outperform silver
yes,
by like 2x if we get back to a one, up to one
yeah,
ish
true,
area. So that means that silver going up, if silver doubles, Silj will go up 4x.
exactly, yeah.
But
Uh,
you were talking about some pretty high silver numbers.
yeah, I mean, I have my bear target at 100, and then if you take the cup and handle on a log scale, don't correct me if I'm wrong here, but roughly 600 or so.
Yeah.
Again, they
Somewhere.
are big, yeah, they are big numbers, and again, that's not tomorrow. That's not 3-4 years from now. That's maybe, at the end of the decade, starting of next decade, maybe. Again, the timing of these things can be really, really difficult to predict. Um, so you can only say
So
yeah, go ahead.
sorry to cut you off. I didn't mean to cut you off.
No, it's fine. It's fine. Just go ahead, Andy. It's fine. It's fine.
Well, I just want to make sure that everybody understands exactly kind of what this means. So Silj going up 2x, and if we have a potential target between 100 and a few hundred going all the way up there, that means that silver would be going up, if we're just at 30, 3x to about 100, or maybe even 10x to, depending on where we go. If it's $300, it's a 10x.
Yeah.
So if it 10x's and you're in some of these companies that have the leverage to the price of silver, and let's say their leverage is like a 3x as well, because this is Silj. Silj is just an ETF that's kind of watered down with some larger producers, but there could be some companies that are 3, 4, 5 times leverage to a price that's going to go up 30x. So you could potentially, depending on where you buy it and the cojones that you have, you could get 100 times your money on some of these speculative companies. I'm not stating that you will, but the
No, no.
potential possibility over a long period is there.
Yeah.
Would you agree or
But
disagree with my statement, Kasper?
I I agree if they are peaking at the same time, because usually you have one peaking before the other. So you again, and that's when you can maybe get that ratio. And they will not peak at the same time. I cannot remember what happened, back in 2008 to 2011, which one peaked first. But again, there will be one of the other peaking first. And so you will, even though you can measure like 100x, maybe if they're not peaking at the same time, you might get like 60 or whatever, depending on how it goes. But yeah,
And
overall, the theory is correct. I agree. I agree.
did you look at the 1970s and some of the gold and silver mining stocks from the 1970s? There were a whole bunch that went up like hundreds of X,
No, really, I
like a
haven't
whole
checked.
bunch.
Yeah,
Yeah, you should take a
I
look.
have.
It'll blow your mind and it'll change your opinion about the gold and silver mining space. But don't look too long because you'll get too addicted to it.
Yeah, sure. Same as I think it was the uranium Palladium energy also came from like zero, was it 1 cent or 2 cent to like I don't know $10 or so,
Yeah, it did a
like 15
thousand
years
times as
ago.
money.
Yeah, it's insane. So yeah, but again, in order to ride these, and as you say, you're not guaranteed to get them obviously. But again, if you can ride it and stomach the volatility and sleep tight, even though you maybe have had like 1 week where it has dropped like 30%, then you have a chance of doing something amazing here. a chance. It's very difficult just to put a stamp on that. It's very, very difficult to be in the mining space. I've learned that the hard way and the good way. It has served me very well, but I also have had periods where, you're about to throw in the towel. It's very difficult. It's very, very difficult.
Yeah.
So
Anything else you'd like to share on the gold and silver space? Any other ratios? Anything that you think is important for the viewers that you're looking at or watching? It could be gold to S&P 500, gold to Dow Jones, silver to oil. I don't know, whatever ratio, other ratios or anything that you want to share.
I think I had a few, but I can't remember
So here's a
which one it
ratio
were.
that I don't know. I don't know if you've looked at it, but let's get your opinion on it because I always look at it. What about crude
Sure.
oil to silver?
Oh, that one I haven't looked at in ages. So that's a
Because I
good
know
one.
a lot of people are pretty bullish on silver. It doesn't look
Yeah.
like it's a tough one. No structure.
Yeah, no structure. Basically going sideways. I think I mean
Yeah.
you can basically, again, this is a very quick draw, but again, you basically are ping-ponging between some levels here, and you can see that crude oil is definitely at
Getting
the
cheap
low
against
end,
silver.
getting somewhat cheap, yeah, but then it doesn't mean that it cannot go down, another 30% or so, but you're definitely coming into the zone where where uh, where in relation to silver, it's getting a bit more oil, or crude oil in this case, is getting somewhat cheap. Um, and I think we're going to look at crude oil in part two here, because crude oil is also at a very fine moment here potentially. So yeah.
I don't. My camera keeps going in and out. I don't know what. It might be overheating or something.
Okay. No problem.
Yeah. So, anything else you'd like to share with gold and silver?
No, I just want to, maybe we should, it's not related per se to gold and silver, but I think uh, if we were to look quickly at copper, because they are somewhat related as well. We had that huge move there whenever we got above $4 on copper,
Mhm.
testing it, and then we just ran heavily into $5 and overperformed a bit. We then came all the way down to the pivot over here at roughly 4.33, and now we're pulling back. But again, potentially, this could actually go down a bit further, and then it raises the concern that could we already be at that point in time where gold and silver is actually starting to come down a bit. So I think you should watch copper here and what it is doing in for the next, I don't know, month or so. There could be some signs there, I guess. So,
What
but
about we could also do platinum and palladium. We
oh
could also look
yes,
at those because those are precious metal related too.
yeah, they are. So yeah, I know there's a lot of lines going on here. Maybe I should remove just a few just to make it a bit more clear, just very quickly there. So this is this is platinum, excuse me, palladium, and let's just start by zooming out just a bit here, just to show you the drawdowns that you can have in platinum. This is back in '07. You had like a 70% drawdown, and then again here you had a 50%, and now we have had again 70% drawdown. So we are at that stage where I think palladium is bottoming out. You also have a big support and resistance zone here between 850 to roughly 900. You can see we are bouncing there, holding still, and we have actually broken out here of the falling wedge, depending on how you draw it, but there's different ways to do it. But if we take the outliers here, you can see we have broken out, retesting as we speak. So Palladium is doing, actually, for the past, basically the entire 2024, it has really been trying to bottom out, and we still have some way to go, just to be sure. But again, it's looking better and better for each week that goes by, for platinum. Excuse me, palladium. My bad. Palladium. Palladium, not platinum. Palladium.
Yeah,
So
it does look good. It looks like it's trying to bottom.
yeah.
Yeah,
Also, if you look
definitely.
at the few miners that there are, because there are not many, they have also moved quite a bit actually in the past, I don't know, 5 weeks or so. Not as much lately, but prior to the past 2 weeks, they have done really well. So maybe they are anticipating higher prices there. So,
Yep. So
and then we have
platinum,
your good boy platinum here.
my boy
And
Platty. Yep.
oh yes, it has been it has been very, what's it called, very not difficult, but again a little bit frustrating to be
Grinding.
for. Yeah, it's been grinding, it's been faking it has done a lot of stuff to really mess with your mind. But I think we are basically at the same spot where we were last time we talked. We are still trying, and I say trying, to finally convert that neckline into a breakout. The breakout level is roughly, anywhere between, same thing as I said last time, between 1,050 to $1,100. That's basically when it could do that move and breakout. But again, overall, from a long-term perspective, it looks quite good. But again, we have to wait for the confirmation to break out. But we have broken the overall golden trend line, and we are now waiting for the bottoming here. And I think it will follow silver. Silver had similar-ish kind of pattern. And it should come, it should pop up there at some point in time. And we are now at actually almost exactly $1,000. So you only, in quote, need like 10% for platinum to do well. So yeah. And again, platinum
That's
is,
good.
I think platinum is like 30 times more rare than gold, if my memory serves me correct. So again, very scarce metals, and they are mined in, I think, the some very rough places like Russia, Africa, and somewhere else. Basically, places if one thing goes off, the entire region is basically not doing anything, and you will not get your platinum. So very scarce, and the chart is looking good, but again, look for that $1,100 to break.
Question of the day: is platinum cheaper than silver
In relation
to those two metals?
oh, you want to do like a ratio thing? Oh,
Yep.
I know the chart. Yeah, I think uh, platinum has underperformed heavily, but it is also within a structure on the log scale where a lot of people will say that at some point in time, platinum will outperform heavily. Maybe not in the near future, but it could, when it breaks out, actually do insanely well in relation to silver. You can quickly look at it because I think I have the chart here all lined up. I don't know. It's not perfect there, but I can quickly do the. I can quickly, again, this is a very, very quick draw there. Wrong color and all that, but still there it is, roughly,
It's going
right?
to do a false breakdown.
Yeah,
It'll
yeah,
break down when there's a slowdown in the market.
yeah,
And then when they print the money and we go into a big commodity bull market, it's going to rip. That's
yeah,
my guess.
yeah. That's a very, very big possibility. But again, we have the three impulses there, low lows, falling wedge into the apex. But I do agree, it looks very heavy, and we could see that, but then as soon as we snap back in, we have the confirmation that is your false breakdown. And there is a saying, from false breakdowns comes huge reversals, and that's also what I think will happen here if that is the case. So
And I don't think it will be from platinum falling. I think it will be from silver launching from the slowdown that we're going to get here shortly.
yeah,
That's my
yeah,
guess.
yeah, yeah,
And platinum will just kind of sit when that launches.
yeah.
Fingers
So it's a
crossed.
ratio. So yeah, so it's a ratio. So it has nothing to do with dollars. It's basically the measurement between the two. So
Yeah.
there are many things that can happen, So
Another question: would you exchange your silver for platinum if we get that big false breakdown?
that's not my plan, though. My plan is to do the conversion at roughly, below 20 to 30 to 1, in the gold to silver ratio. I have some
Okay, so
platinum,
you're
but
okay.
that's not my plan. It's not my plan to do. But maybe if it looks too good, maybe I will do some. I don't know. It's not in my playbook for now. So
It could be in my playbook just from a physical storage standpoint.
yeah, yeah,
Clean some
yeah,
up.
yeah, exactly. Getting less coins, but a more valuable metal. So
Yeah, yeah. Okay, so anything else that you'd like to chat about on the precious metals or metals front?
no, I mean, again, nothing happens overnight, but gold and silver is in a raging bull market, and that's basically what you need to know from a long perspective, I guess.
I'll
It's
say
that
another
simple.
one.
Yeah,
Have you charted gold divided by the CPI?
I have, and I know exactly where you're going because that is
Yeah,
a
I know.
that
I know
that
what
is
I'm doing.
yeah, that's a that's
It's
that's
chart
probably,
porn.
yeah, it is.
That's
It's
all it is.
probably, I have the gold to silver ratio, and then I have the URA divided by the uranium spot price as my favorite. But this is probably number three on that list, if not higher. Again, this is just
It's ready to
if you
go. It's ready to
if you have
go.
just a tiny bit of understanding of technicals, this is just will blow your mind. It's amazing. It is just, I mean, it doesn't get better than this from a chart perspective. It's exactly what you want to see. I mean, it's incredible. And from this, you can actually also do a measured move if we were to do that.
It's huge. It's huge.
It's you, and keep in mind we talked rates, and that is obviously related to inflation. So inflation will remain high, no questions there, for a long period of time. But in this case, you actually have gold to outperform a high inflation by 500%. So inflation will
It's
go
like
up, and but
that's
gold
like the
will
19
do
that's like the 1970s, right? I mean,
100%, 100%. Yeah, this is your 1970s.
yeah,
Yes, I know we got off the gold standard there, but still, this is the 1970s where you had rates going from I think like zero basically to like 20, and gold outperformed that heavily. So, and we are definitely on the brink of breaking that. And if I were to give like a level, whoa, excuse me, if I were to give like a level, let's call it, just to be on the safe side, 8 in the ratio here. Then it's game on for gold really.
so
Um,
let me tie this together, all right? I don't want to be too crazy. So we've got gold with a really good setup against inflation, much like the 1970s. We've got a downside breakout of silver against gold on the ratio. And then we've got SILJ, which is incredibly cheap against silver. So could one conclude that the silver junior companies could be the largest asymmetric opportunity in the market today? Could one make that conclusion?
yes, with one of the most volatile components also. It's insanely volatile, but yes, I agree. I agree. Just to
So
have that.
then it's a position size problem with the volatility. It's not a problem of the asset necessarily. That's just an outcome because the
Yeah,
symmetry is going to be so big that the volatility has to be there, which
100%.
means this is what when I looked at all this stuff and I was trying to find opportunities to deploy money into, silver juniors came up just because of the symmetry. It's so big, I can't find anything that large in the market, so I had to have some money in it.
Exactly.
Is that kind of what your thoughts are?
Yeah, I mean, if you have like, if let's say your portfolio is 5% juniors, silver juniors, at the end of this, that 5% will be a lot bigger.
If it worked out, yeah.
Yeah, it's going to be a lot bigger. And at some point in time, depending on your portfolio, the amount in dollars will also be where you will feel uncomfortable dropping, 30% in like 2 weeks. It's going to hurt. So again, it's a psychological, barrier and a position sizing, and that's why it's very difficult. You want to scale out just to reduce the stress on you. It's very difficult, and you need to have a plan basically, if we get the
Stress
moves
it.
that we are talking about. So
I'm gonna stress through it, man.
I know
That's my
you're
plan.
very good at holding
I'm
stuff,
gonna go
and
through it.
that has yeah exactly. Um, So yeah, and
Yeah.
again, timing the market, again, no one is going to exit at the top. But again, if you do your very best and you have a plan and you're saying, if this happens, I'm going to exit, and you have done well, it doesn't matter if it goes up another 100%. It doesn't matter. You have done well. You had a plan. Stick to it. Um, that's all you can do. That's all you can do, really.
That's all I had because I wanted to make sure we talked about this a little bit. Have anything else or any closing statements on gold and silver or anything?
Gold and silver is in a bull market. That's it.
All
That's it.
All right, so that's what we've got for part one. Anything you'd like? How do they reach out to you? How do they find you, Casper? We'll put at the back of this one just in case someone's interested in reaching out to you.
Oh, thank you for asking. Yes, I have my Twitter account that I started like 5 years ago. It's uselink.inv. I also have a YouTube with the same, name there. And then I started like 4 months ago. I started the Substack with more detailed, technicals, trying just like you have, trying to find stocks, entries, good risk reward, all that good stuff. Where we try to do our best. Again, I'm not correct 100% of the time, but we want to skew our, percentage, as high as we can to be correct. So those are the three places where you can find me.
We'll head over to part two, which will be released later. It'll be the energy sector.
Energy,
All right,
yes.
guys. See you for now.